I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market worked its way lower this week, actually failing from a key level that we talked about a week ago. Stocks started out strong, but then seemed to hit a wall. The news that Secretary of State Tillerson was out seemed to set off investors and got them worried. Then news of more coming shakeup in President Trump's cabinet didn't help at all, as investor worry seemed to continue. This news certainly brings forth that old cliche about rearranging the deck chairs on the Titanic. If there's a sinking ship, it's really about the 2018 midterms, as history shows that the sitting president usually suffers some pretty big losses. In fact, some giant losses in recent history where presidents did lose control of Congress if they had it, and some presidents that were sitting lost as many as 60-something seats in the House. So there is certainly risk out there, and that might be what has the investors nervous. If you thought that it was hard to pass things before, it will certainly be incredibly difficult or impossible to pass things then if the president loses the House. Senate may not be quite at risk, but it could be. But the House certainly is at risk. It is very worth noting that this week saw record inflows into equities. $43.3 billion came into equities, and that's versus a very meager $2.4 billion into bond funds. So money flowing strongly into stocks. Yet it was really a big down week for the stock market relative to that, and maybe the big cracks that we saw in the stock market with the end of January, beginning of February, 2 weeks seeing more than a 10% decline from peak to valley. Maybe even that big flow of money into equities couldn't put Humpty Dumpty together again. So that is certainly a concern moving forward. If all that money coming into stocks couldn't give it a lift this week, something may certainly be going on. I've got a little bit more to say about that as we move forward. I want you to take a look here at the 60-minute chart of the S&P 500 as we take a peek what happened this week in markets, the gray area being the overnight and the white area being the normal pit trading, as we say. You can see here world markets stronger on Monday. They moved up overnight, and then manufacturing stocks got knocked down as this fears of tariffs really has come back in and really scared investors a number of times. So we get this movement overnight on Monday, but then the market reversed. Tuesday was a day it got right up into that resistance zone that we were talking about in the stock market last week, and then the news came that Tillerson was out. And you can see what happened as investors got really nervous. There was a rally as the CPI was in line, only up 0.2%, but selling came throughout the day, and it ended up to be a pretty dramatic down day. On Wednesday, we saw retail sales weaken for the third month. Consumer costs, though, were rising 0.4%, so that got people a little bit nervous. And news came out that GDP estimates had fallen to 1.9%. Well, so much for the tax plan and that being a big stimulus. And then there were more fears about China's retaliation as the president comes out and asks for $100 billion in a change in the deficit, trade deficit with China. We got another big down wave in here on Wednesday. As you can see, down waves kept coming. Note that we got trapped in a range over here on Thursday and Friday. Bitcoin, by the way, had a fast 10% drop over here, as there appears to be worldwide crackdown in banks accepting Bitcoin. And then we got a little bit of a lift over here as the news came out that Kudlow was appointed as chief economic advisor. And then he came out and said Fed should let the economy rip and not overdo hikes. In other words, let it run hot. Kudlow ran a great show. I hardly ever missed it. And I think he was great as a show host. He's a free market guy, which makes me happy. He's also a strong dollar guy, which could be trouble for the bond market. And but he always puts a bullish spin on everything, so you can't believe a thing he says. And that is what really bothers me about him being in that position. He must only be there because the president thinks that, well, he'll say what he wants him to. So that's a pretty sad situation in here. So more news about the shakeup, though, and people that are going to be fired and leaving the Trump ship. So it seems to be tipping, and big selling wave comes after that. And on Friday, Japan comes up with weak economic data. Industrial production is strong here in the U.S. And, of course, that record inflow into equities gets a rally, but doesn't seem to be able to break out of that range. And here, as we're entering the final hour on Friday, we see that the market is kind of languishing up a little bit on the day. So overall, it's a mixed day in here, as the NASDAQ is struggling a little bit, the broad market up a little bit, and overall you could see that the market did have kind of a rough time in this last week. We'll call it modest declines, as the stock market major indexes end up down 1 to 1.5% for the week, at least close to ending at it. Bond market 30-year up about 0.75 points. We had the 10-year yields fall by about 5 basis points as bond market was a little stronger. Dollar up just a little bit. It is really struggling to get any upside gains. Inversely to the dollar is gold, down about $11 on the week, and it all comes Thursday and Friday as silver also falls down about 30 cents on the week. Both of those got down to the bottom of the ranges and even a little past that we were looking at for this week. You'll see more about that in the coming short-term view. Oil edges up a little bit. It really comes off Friday. It struggled all week long. There's a big battle going on between these waffling of what the inventory levels look like, and at the same time oil shale producers out there pumping away. So that battle is going on. We do still think that the highs for the year are in the oil market. So if you check our Future Speak video that we did on Wednesday, we showed you the longer term patterns in there and why we think there's very near possibility for a breakdown in the oil market. So you're going to want to see that. I'm going to share one more chart right now with you. As you know, I had mentioned the fact that all that money came in, and there apparently was a weakness in the market, despite the fact that we had this inflow into equities that was pretty strong. So I kind of wanted to look for something to help explain that situation. I'm going to show you a chart right now, and there's a tell right now going on. You're a poker player where there's a tell. And when investors get worried, the junk bond market tends to move down first. So this chart I'm going to show you tells a story. And this story in here is about 10 years of markets, and what accompanied market declines was a weakening in the junk bond market. We'll talk a little bit more about why that happens. So here is a interesting comparative chart. The candlestick chart that you're looking at right over here, this one right there, is the junk bond market. And this is the S&P 500. And of course, the S&P 500 has moved up very, very sharply through that entire period of time there. Now, there were corrections in the stock market when throughout this time period. And you can see in here the junk bond market collapse essentially as it drove the stock market down, where the stock market fell 57%. There was a massive amount of worrying about corporations and corporate debt, and that's why the junk bond market collapsed with the stock market. Now there's other periods that I want you to notice in here, and that is, notice the rolling over in the junk bond market right over here. That preceded this topping right over here and a 21% correction in 2011 in the stock market. Now, there are other times when the junk bond market fell and it led stocks down, but some of them were only in the area of 6, 8, 10% declines, like this one right in here that you could see right there. That was, I think, a 12% decline. This break right over here, but you see it's a fast break, comes off the high, and you get just a modest about 8% decline in the market right there. But other times that you could see right in here, when the junk bond market actually rolls over in a severe way, you get some pretty good corrections. And this was the one in 2015 and 16, where it fell about 16, 17% twice right there. It would be unusual for a correction to be that small and not get at least a double dip when you get the rolling over like you see right over here, because there's a lot of fear in the junk bonds. And now look what's happening right over here. You're getting this rolling over right there in the junk bond market. So there's a lot of concern. Junk bond yields incredibly low, at this point. And now you could see here's that stock market break right there, the first one that fell about 10%. And now really struggling when you look at it there. Let's take a closer look right in here as you see junk bond rolling over and really looking weak. The stock market one little leg down and a rally up to the resistance level that it just failed at this week, and now looking like it's starting to struggle, and struggling when you have this really massive amount of money coming in to the stock market equity funds. So that could explain it. There's a lot of fear potentially in this lower tier of the market, the companies that, well, they don't really earn any money and they have high debt. By the way, are you aware that of the listed companies that are here in the United States, nearly half of them lose money? Can you believe that? And if you look at the science-based companies, the tech companies, those companies that have driven the NASDAQ up, of course, it's the high caps in the NASDAQ that have driven the market up so well, but the science-based companies, almost 70% of listed companies lose money. So that's the hook that investors have been put into here because of the low Fed rates and the great experiment that's been going on right now. For the last almost 10 years, as the government moved interest rates down to zero, and now has maintained interest rates just over 1% now for all this period of time. So that's been, brought a lot of financial engineering. It's brought an earnings bubble for the companies that do make money because of the falsities of being able to borrow money at those low prices. So all of that shows that there's risk, and I think that based on what we're seeing in here in the junk bond market rolling over, that it's a tell, and that we only saw the first leg of the correction in the stock market, and there's probably another one coming. What do you think? I think so. That's it for the opening segment, and we're going to be right back in a couple minutes with the best and worst stocks for the week. But make sure you watch this. Announcing the askSlim Cycle Analysis Workshop. Charting, adding the dimension of time, understanding energies that drive markets, expanding your overall market awareness, and raising your odds of trading success. Learn to go from a basic chart like this all the way through a chart that looks like this as you learn the amazing studies that are involved in cycle analysis. This is a workshop that I really encourage you to take. Once you take the workshop, charts will never look the same to you. 43 years of study has gone into this, 2 years to write the workshop, and over 6 months to produce it. Charts will then speak to you in a different way as they take on a whole new dimension. Patterns are then forward-looking as you project in price and time based on the rhythms that you identify in each stock or future or ETF. Trading decisions will improve, entries and exits will be clearer, and your win-loss percentage will vastly improve as you learn this process of charting, which is something that I have found over these years unbelievably amazing. You've seen me do it on all of my charts. Now it's time for you to take the step and make the investment to learn this style of charting. What's included? Well, there are 20 videos in the workshop. Step-by-step learning process, one module building on the next. Many videos will be linked to it from our library that are supportive and will help. So 20 videos plus 10 or more videos that will be available to you as you learn this very, very informative way to look at charts. I'm going to add videos to that and addendums afterwards as you send me questions. So I'll answer your questions and then build on this workshop after that. And for 30 days, you're going to get my email support. After you purchase, you'll be able to then send me emails and ask me questions, and then I'm going to give you one-on-one support through emails as you take this workshop. So you will be supported. You will not be alone. So don't miss our great pre-launch, which is right now. The pre-launch price is at a 30% discount to the retail pricing. The pre-launch sale will open around April 1st. So if you sign up now and only for the next 2 weeks, you're going to be able to get that 30% discount. And then the workshop will actually be available. Our launch date is mid-April. So you get on the list now for that special pricing. Around April 1st, we'll send you a special link for you to make the purchase. And then around April 15th is the time that we're going to be actually launching the workshop. So now is the time to sign up. Go to the askSlim front page, askSlim.com. Go to the bottom of it and you'll see a puzzle piece that says Cycle Workshop. Click on there and you can just add your information. You'll be on the list. We never share that information. Then when the day comes that we're ready around April 1st to start the sale at that special price, we're going to send you that special link. This is an investment that you really must take. It's an incredible value. You'll never get this type of information, and this is me that's taken almost a 50-year-old way to look at charts and having evolved it in a lot of my own additions to this style that are just fantastic. You're going to love this. It's a great investment for you to take if you're going to be using technical analysis in your trading or investment approach. So go to askSlim.com right now and sign up for that special pricing. Thank you. All right, now we are in the best of the week. We're going to look at the stocks that had some of the best moves, some of the best patterns as we get into our cycle charts here. The core of our work is on the weekly charts, though we do cycle analysis, cycle analysis on daily charts also. And on our focus list of charts, we look at the 56 best charts, though my broad universe is over 300 stocks that I look at, and of course we look at futures and ETFs also. So here is DIX. DIX is the biggest mover on my list of the week, and that is a 10% gain on the week as their earnings beat and their revenues, however, missed. So you get this big upside move in here, and we had mentioned, we tweeted this out, that we thought that the stock was positive. I just want to put this, get a little closer in here for you to see what we're looking at. So for cycle analysis, what makes it a positive chart is that the time period for correction had run out. and it had built a base based on what we call a positive configuration and right-hand translation. We have a video for each of those on translations and configurations within our workshop. So now it enters into a rising period. The stock dipped early and then traded in a very positive way. So you can see that it has now entered into the rising zone. We are projecting up into this resistance area right up there, up near around $39 in the next, maybe month or so, before it then rolls over again. If it's really good, it'll get past that level, and then we'll know it, because that is supposed to be a resistance level. You could see it right now trying to move past that high as it's really struggled in this first confluence level, but it looks now like it's going to move through on the upside. Here is the daily cycle analysis. You can see right in there. And this was a VTL breakout that we have right in here. VTL breakouts will be explained also in the workshop. It's a different way to put in trend lines, an important way, and you could put in alerts on those. So that breakout really was meaningful, and you could see the stock moving up. Now, the cycle patterns on the short term, which is our daily, says that you're likely to get a little correction in here over the next week. So somewhere right in here is some support right there. We didn't put that in. Maybe it's the counter trend line coming right across there, and that would be the buy area, because we think that, of course, the weekly pattern, as you see right here, looks like it's going to go up to about 39, and this is stalling right around 35.70. So if you could buy it around 34.5, I think there's a pretty good rush of about 4 points in the next month coming. So that's a look at DIX, up 10% on the week, and I would call it positive. The next thing we're going to look at is not GD, it's DG. So let's go right back over here. Now this is interesting because we have on the bottom, you will note that there are two what we call out of phase cycle patterns in here. So this one that we were looking at there looked like it was getting off, and then all of a sudden what pops out at us is a new more dominant pattern that you see right there. That pattern bottoms right over here at the 50% fib and then turns up. So this had a pretty big decline. That means that this resistance zone is likely to be a problem. We'll call it 96 up to about 98.5. It's right now trading at 95. So it has a little bit more room. We'll learn more and more as time goes by in here to see if it gets through that resistance zone. Right now we think the area up around 98.5 is going to be the problem, and Dollar Tree's got a much worse pattern, so that could be giving us a little bit of a tell, as the potential for that group may not be that good. Earnings in line, but same-store sales were strong and their outlook was stronger, so they gained 9% on the week. Micron MU, this is a stock we have been all over on our list for best stocks of 2018. The point we were making was that earnings kept getting revised up. The pace of the stock could not keep up with how fast earnings were being revised upward. Nomura comes out this week and doubles its upside target. Other analysts come out and raise it, and then you can see it gets up to the 100% fib extension. What does that mean? It means that the distance from this low to this high is the same distance from this low to this high. So we put in these extensions, which are normally measurements, and it could be the 78%, the 100%, the 161.8, which happens to be right up over there, and that is our target, up over around $76 in the stock. So bullish pattern that we're in right now. There could be a little bit of a pullback from this 100%, but I think if you got a pullback in Micron, that the buyers are going to be coming back in. So great looking stock when you look at that. Here you could see on the daily chart right over here on the right that it looks like it's in a corrective period, so we put it in a supportive zone right over there, which under 57 would be the area that we would probably initiate alongside trade. So that's a look at the weekly chart right there and the daily chart in Micron. WDC, the next one right here. Look at that strong move right there. You can see that upside move likely to be followed by some modest correction. Where do we get that? Well, you could see in here perfect cycle patterns as it moves upward through this upward pattern following these ideal cycles on the bottom. Then you could see the same type of thing over here as it translates on the right side and gives you only about 2 or 3 weeks for a correction. That's the buy zone under 100. 100 right there. We get that modest little 6-7% pullback, and I think you're going to be in shape to buy it. Up 6% on the week. Analysts upgrading. They are super bullish on this stock. Triple D, DDD, is the 3D printer. You could see right there, man, did we catch a trade last year where we saw this major bull pennant forming and then this breakout. Lots of people caught this and wrote me that how well they did in that breakout move from over 16 up to about 24. So 50% gain after the breakout was just phenomenal. Then it went into a bearishly configured cycle pattern where actually it broke down under this low, made a negative pattern, gave you another negative pattern right in here, and now is building a positive pattern. So we're looking for a correction into May, and then we'll get a buy on this stock. The hope is that medical devices is really the area that they're going to do well. This is a very expensive stock. They have a lot of problems with profitability, and that's why you see it backing off so easily from that major 38%. And they have issues with competition from Hewlett-Packard and other companies that are competing with them. Still, we see this as a potential bullish base forming for the stock, but we would not buy it right here. We would wait and let this play out in this corrective period in Triple D. And the last stock in the bullish stocks that we're going to look at, FSLR, First Solar. This was a stock last year that looked incredibly expensive. And then all of a sudden there were huge upgrades to their earnings. Their forward PE, which was in the hundreds, has fallen to about 47 or so, at least it was towards the end of the year, so it's pretty close right now. And the analysts are still loving this. They are very positive, and the pattern is very positive. We're looking for this fib extension zone up here to get hit near $80 on the stock. 10 more dollars. So I think if you got some pullbacks in this stock, First Solar, I think it's a stock that you can buy. You can see the really positive pattern in there, as these are the ideal cycle patterns right in here, and the way they resolved based on an upward momentum indicator right there, or that upward trend component, then pushes it up, and it says that the likelihood of new highs are very high when you look at that pattern right there. So First Solar looks to us quite bullish. The analysts love it, and we are liking it too. That's the best stocks for the week that we have in our 300 stock universe, and I'm going to bring you the worst. All right, for the worst stocks of the week, the worst stock in my 300 stock universe was Consol, CNX. This is on my list of stocks that I think are the best for 2018. A coal stock. They recently had a spin-off, so they're still in the coal and energy industry, and there was no reason that I could find looking at this for this pullback that we've had in the stock, except for the fact that it screamed on the upside and maybe just hit a confluence of resistances right there that caused it to pull back. No news. There may be some talk out there on dividend concerns, and that might have been what bothered the stock as it pulled back in here. The question is that the top of this particular cycle pattern? So in other words, are we going to get something like this where it rallies 4 weeks and then falls for the whole rest of the period? Or is it just simply a fake like this one over here that had that dip and then stormed back to new highs? So it looked like this, and this one just might simply be looking like this for another move up over here. So it's yet to be proven when you look at that. No news, down 10% on the week, and I would tend to want to be a buyer in here. There's not a lot of competition in the coal category, and believe me, there are monstrous users of coal throughout the world, even though President Obama tried to kill the coal industry while he was in office. So CNX down 10% on the week. Activision, this group, Activision, Take-Two, were both down on the week because there was talk about competition, and that's not it. TVI. That's it, right? Activision Blizzard. There was some fear about the competitive environment. It's hurt both Activision and Take-Two. You can see in here the support zone that it's coming down into. Now, I think that zone's going to hold, to tell you the truth. So you can see the cyclic patterns very clearly in here. This is interesting because you could see positive pattern, and a negative pattern right in here. Is it configured negatively? The odds were not good that it was going to get a breakout, but that did. And once it broke above that level, the message was that it was strong. So that happens only about 1 in 4 times when you get a negative pattern and then becomes a positive pattern, but it has a strong message. Now, note the engulfing top right over here in this week. That is a bad message. There's a likely decline here into late March, early April that we see. You can see the declining phases right in here. When it's bullish, it hardly falls. That's called swamping. And when it's bearish, well, it falls pretty hard, like you could see right in there or right in here. So right now, well, we're looking for about a month of decline. We'll take it down to about $68 right in there, and then we'll have to see. You can see the 34-week moving average giving it good support a number of times as it rises up into this support zone. So Activision, we would say competitive concerns, but chart-wise, it just looks like it's going to be a pullback for maybe a month's time in here, looking at ATVI, Activision. TTWO, Take-Two in the same group. This one, a lot worse. Why is it worse? Well, you can see that what happened was that all of these 1, 2, 3, 4 very positive cycles in there, it's supposed to take out this high and does, but then fails and almost takes out that low. If it would have broken it, that intermediate cycle low support breakdown would have been negative. It avoided it by touching the 34-week moving average and bouncing, but it's back down there again. Again, this looks like mid-April, and I think it's going to break down. I think this is a major top forming in here. What makes it a major top? Well, you'll end up with a big negatively configured pattern. In other words, a left shoulder and this cycle making a head. And then when this rally comes, it would make the right shoulder and then come down. Yes, cycle patterns make head and shoulders patterns, and that's an example of how that happens. And you can see in here a very clear risk here over this next we'll call it 4 to 6 weeks on potentially on the downside. We're very negative. We see 92 or worse on the stock on the downside. 92 is here. This is 83 right over here. So it could get down that far. One of the absolutely massively strong stocks for just forever, it seems, is Boeing. I mean, they have just been in a great environment where airlines all around the world have been rebuilding their fleets and buying these great airplanes. If you've flown on a 777 or 787, oh my goodness, those are incredible planes. So they've been really competing well and competing against Airbus, but now there may be risk because if there's a tariff fight in here, and especially with the EU, and there's a big potential for that, then Boeing is a target. They would put tariffs on Boeing airplanes, and that would give Airbus a big advantage, and you're going to start to see cancellations under that consideration. And the Boeing chart, which our option bias indicator maintained at the highest positive level for 6 months and longer, now is starting to show weakness. And this stock on the weekly patterns in here is rolling over, that you could see right over there. If it gets underneath that low, right around 316, now that's 13 points from where it is now, and you could see this evening star top and rolling over very early in this cycle pattern. That is a big amount of risk. Under 316 is going to be a breakdown. If this tariff thing happens, the people are going to be terrified about Boeing. That I'll tell you. And you can see bullish pattern, bullish pattern, bullish pattern, and potential breakdown right over there. And that is a bad sign when you look at Boeing. And I'm believing that if you're a long-term holder in Boeing, it is time to lighten up. Maybe it's time to write some calls in there, or time to buy some puts in there if you don't want to hold it out, or just some insurance or something, because this does look to me like there is risk looking at Boeing. I'm never going to give you advice and tell you what to do. I'm just simply giving you ideas around the analysis that I see here. I'm not going to show you this stock very much again, as I'm going to take it out of my list soon because Sears is going bye-bye. We've talked about this for a couple of years in here, that it was in this downward meltdown pattern, and that it was there was an existential threat in this company. This certainly looks like we're going to see a filing in here that says that they're BK pretty soon, and maybe the Toys R Us situation even made it look worse to them, and some of the retailers with a lot of debt have gotten under some pressure this week, and this is Sears projecting down in this leg through the end of March, and then maybe some false little rally. But you see that zero way down over there? I mean, that's where it's headed. So a really bad situation. JCPenney is another one that we were all over, and that one a very similar situation also. JCPenney may actually have a little bit more life in it than Sears does right now. U.S. Steel. Now, what's up with this? I mean, if they're going to benefit from tariffs and protecting U.S. companies from foreign steel, then why is this stock giving up so much ground? I want you to note the fib extension zone right over there. It's very common for a bullish stock to fail in between the 78.6 and 100% fib extension. Those are often our target zones. Note the high waves. See those three candlestick wicks that are up there? Those high waves, as they're called, indicate a lot of selling in that area between 46 and 48. Now it drops all the way from 47.64 to a low this week of $38. That's a big drop, like almost $10. Now, this right over here is the DBB. That is the base metal indicator. It used to track that very closely, but it doesn't. So I don't want there to be confusion looking at these cycles. This one right over here is the cycle bracket for the U.S. Steel, and you could see looking at that, the patterns in here that follow that cycle rhythm. So in other words, this, see that little timing spike right there? That points to this low right over here. This one points to this low right over here. This one points here. You could see the rhythmic motion is just absolutely gorgeous. Is this the top? Did it turn over? That's a big question. See the support zone right over here? 13-week moving average gives it support all the way right up over here, and it seems to be holding. Look at U.S. Steel. So I think that this is an important zone in here, but it looks to me like it's rolling over, and this company just doesn't have great earnings prospects. Take a look at the daily pattern right in here. So you can see this big downward break. So again, we're just doing a little bit of cycle teaching right in here. This is a positive pattern right here, and then it's supposed to take out this high, and does, but fails. That's where those high waves are living on the weekly. And then you configure negatively. In other words, it rallies and then breaks to a lower low. It says the next rally should fail right in here. That might be a sell zone at that point. So we want to see when it gets up into the lower resistance area, 41.70. The upper one right over here, the top is about 44. So how does it act in here? Note the morning star coming right at the cycle timing low. That's an indication that's as low as it's going to get in that support zone that you can see right over here on the weekly. So that's we're looking for this rally into this zone. We expect it at worst to get up over 41 3/4, and then up to potentially 44. The action in this zone is going to give you important messages, and that's this layers of energy that we look at when we look at cycle analysis. You learn from the multiple time frames, and you learn from how something acts relative to a phase that it should be trading in. So right now we're in a short-term rising phase. We're still green here on the weekly. It should be able to get a good rally. If it fails here, that's big problems. So that is a look at U.S. Steel. And the last stock and the worst of the week, and by the way, U.S. Steel down 6% on the week. Under Armour, take a look at this one. We'll look at the weekly chart. This one is down on the week, not all that significantly, just about 5%. And it gets down into this support zone right over here. Now, this is important because you could see the nesting of the minor and major cycle right over here that comes right around the first week of May. So here we are, middle of March. The next 6 weeks are some pretty good risk in here. Is it going to hold in this support zone? Analysts have come out with neutral ratings in here. And it's a little bit worrisome. This support zone we thought was actually an area where we might want to buy it. So let's take a look here at the daily chart. You could see the rhythmic motion in here as we have the cycles listed out. So when it made the first low right over here, when the cycle came down, that was in a buy zone. In other words, we thought this rally and this correction would bring a spot to buy it. It bounced and rallied perfectly out of there, but now it's failed, and this key low area says that if that breaks, and that is very close, that that is going to be negatively configured. That's, we'll call it 1569. It bounced away from it today, and note the upward momentum. You see that little blue little blue arrow right over there? That means that the upside momentum has been lost. So that big upside pop right over here on earnings, which gave you a positive momentum period, it lost it right over here, and that's not a good sign when you lose your upside momentum. As a matter of fact, you lost the upside momentum here, and then you got into negative momentum and got that break. So that's not a good sign. It looks like it's going to break down, and I want to call this stock, as we look at Under Armour in here, worrisome that it's going to fall down through at least the lower part of the support zone. If you wanted to buy the stock, I would buy it in this dark green area over the next 6 weeks, assuming it doesn't break down through it, because that would be what I would consider to be the buy period right around sometime in May. So it's got to be able to hold up through those through the intermediate support on the left chart. Breaking the support on the right chart wouldn't be that bad. It would just say that this weekly correction is continuing. But getting here under this level, 1422, would be bad. I think you're going to get a buy opportunity in this stock in the next 6 weeks, somewhere under 15 bucks is what it looks like to me. That is the worst of the week, and some pretty good examples of what cycle analysis looks like. It's important for you to take the step and learn that. All right, so we're going to be right back as we now move over to what we always do, which is our short-term view for the coming week. All right, short-term view for the coming week. We look at 5 markets, and we look at the daily charts only as we do the cycle analysis, and look at cycles, look at momentum. A lot of what affects my analysis on these daily charts you won't see because they're influenced by the longer time frames in the weekly and monthly analysis that we do. So this is basically a superficial picture maybe of the type of all of the different layers of analysis that we put in it, but I think you're going to find it valuable and interesting. I always want to be accountable to what I said in the last week, and for the second week in a row I would rate our analysis at 80%. This last week, the week before, we missed on the stock market. This week, we actually missed on the oil market, not by much, because the oil market managed to have a good Friday, and therefore it had an unchanged week. And in oil, we were looking for a downside week. Just we'll call it getting saved, and maybe took away our 90+% rating on our analysis. So let's take a look at here, and you're going to see where we went right and where we went wrong in here. So in the case of oil, we had expected that it was going to break that minor support listed in there. You could see that right there where that green zone is in the minor support, and that it would violate this support area right over here and then go into a negative pattern. Now you can see the short-term cyclical patterns in here that are really pretty clear. So you can see this low right over here. This one not readable. This is totally swamped because the slim ribbon was so strong, the momentum so strong that there was no dip whatsoever in here. So it just moved sideways a couple days through that level right there, and then you could see the correction here, the correction here, here, and the one that was due right over here that has not come yet. So that's this cycle bracket right on the bottom that is helping you see these dotted lines. This is ideal, this is actual. So when you look closely in here, we expected that breakdown to come. Did not come. So we get this wrong this week. Last week, we noted the 89-day moving average support and this potential, range zone between this 59.95 and this zone up here. We thought 59.95 would break, and it did not. You could see it tried, but then gets support right at the right spot and bounces up. For the next week, what we're projecting is that it's going to pull back in here one more time, but it's running out of time to break down. So our notes essentially show this action right in here. And this is actually 2 weeks out. So we expect a little bit of a give back on the downside, a little bit of a rally over here, and then turning on the downside again. We see a range in the next, we'll call it 5-7 trading sessions, of between $60 and $63.30, as we have this range marked off right in here. So we think we're going to get stuck in there, and the risks are to the downside. Momentum is negative. You see that red arrow right over there? But it is in a minor way that it's negative. When you get negative momentum, when you get a really wide slim ribbon, is when you have confidence. At this point, it's mildly negative momentum and could easily get neutral again. So the momentum is not a big factor in here, but the cycle pattern suggests a pullback and then another attempted rally. So that's what we're going to look for in the next week. The next thing we're going to look at is the dollar, dollar sign DXY. And what we see in here is the daily chart again. Now, last week we said that, well, if you saw futures speak, which is on Wednesday, we talked about that there was a bull flag forming and there was a strong likelihood that it would break out. And you could see that is what happened in there. This, if it got below that cycle low and violated, it would have been negative, and we were concerned about that, but we thought it was low odds. So last week we said that it would have an up week, which it did, and that it's likely to move up towards 91 in 1 to 2 weeks, which it has not yet. We're going to project this week that it's likely it's going to try to get up there towards that 91 area. It's going to run into some cycle resistance over here at 90.90, so 90.90, 91 might be the spot where it stalls in the next rally, and you can see in here, see these cycle rhythms right in here. We thought this was too early to break down with that little bull flag. That's exactly what it did right in here. You can see that, and then took off and got up into the resistance. We think it's going to take off, get into the resistance, pull back, get another rally into here. So overall, you can see we have kind of an upward zigzag that looks like it's going to happen in here. And by the way, that's probably not great overall for the metals markets when you look at that. So this followed pretty much what we expected. Didn't quite get the rally we expected yet, but we still think that is coming. Momentum, again, indecisive. Look how close the slim ribbon is there as the moving averages lay right on top of each other. So we have nothing in momentum in there to go at. It's still just choppy. When you look at the euro currency, which a lot of people use as their proxy for trading the dollar, since it's inversely correlated at some 57%, then what we're looking at in here, and there was a roll, so these things are a little bit off, is that we expect that it is going to roll over and then kind of chop its way down for the next week. We would say that the downside is more likely, and again, momentum indecisive in here, as the pattern just simply looks like it's rolling over here in this resistance area and then likely to come down right in here. So we think the dollar's got some upside. We think that the euro currency has some downside. Neither of them have any momentum for us to follow. Pretty much indecisive. Gold market overall, poor action as it tested the low end of the range that we looked at last week. We talked about 13.13 on the downside. We talked about 1343 on the upside, right up over here, the top of that right there, and it couldn't get anywhere near up there. It did range trade just as we expected and got just a couple ticks underneath the low that we expected. At support, this is not good, however. What makes it not good? It's got to move up right away, and it's got to do that at a time period where the dollar looks like it's going to move up. So how can that happen? If it breaks this level right over here, that's going to be bad. As a matter of fact, you can see our projection based on what we had last week is lower now than it was. And based on this formation we're getting in here, based on the negative momentum pattern that we see in here, gold looks like it's got a shot to move to the downside again. The next support after that would be 1291. That is our downside target for the week. We think that it's going to have a downside week and test that support. We'll call it down on the week. The same thing for silver, as silver did the same thing. It even got a little bit lower in silver than we had expected on the bottom of the range. We thought the bottom of the range would be around 1633. This got down to about 1621. So you can see. Now this is important right over here because that is the cycle low support. If it violates under there at 1616, that's going to give you a short-term breakdown and then push it down to the next support level. We think that there's a pretty good probability of breaking down there and then getting down to, well, the next support level, we'll call it 1604, 1603, something like that, right over here. So that's the area we think it's going to break down to. It's about another 30 cents in there, and then it has a chance of improving the pattern. But we're looking for modest down weeks. Notice over here the slim ribbon negative momentum, and since then it has not been able to hold the rally and is now trading near the low price again. So that negative momentum is very important to be looking at, and the negative momentum continues in silver and in gold. Bond market, we did a special video on the bond market that you're going to want to watch. A big picture on the bond market, which we did Thursday, and our members can see that. So can you by becoming a member. Here is the pattern in here. We were looking for small up weeks and in the bond market. Testing 2100, which would have been the top of this red zone, and the same thing we were looking for in the 30-year. I'll show you. So it did exactly as we expected, but not yet getting up to that level. It still has time to go before it rolls over. So we're going to look for it to get up into that zone above this 2023 to 2100. 121 even, sorry, and then roll over. It's probably going to be a small change week in there, and especially since we see something similar but opposite happening in the stock market coming up. So we'll just call it, not a big change in the week. Momentum in here is now improved as the momentum went from negative for this entire period of time. Look at how that kept the downward movement going, to now that little blue star, little blue arrow that you can see right there tells you that the momentum for the first time in many weeks has turned neutral. So that is an improvement when you look at that in the ZN. We're going to look for that little rally to continue and then the rally to fail. In the bond, in the ZBs, which is the 30-year, our upside target was for it to get up to about 144.20. That would have been the it was the top of this level right over here, and it actually is trading right around there right now, but it got a little bit higher up here over 145, and you could see the improved pattern in here. See that little blue arrow right there? That tells you that it held that minor support, and then that this big downward momentum that you see right in there. So you could see where the downward momentum came in the market. This was right over, looking for that little red arrow right there, with it at roughly 151, and takes it all the way down over here to under 141. during that whole negative momentum period and finally neutralizes over here. So this has been very reluctant to move up, and you're going to want to get my bigger picture analysis and understand that. So for the next week, we're looking for a test of 125.24, which is the bottom of this short-term resistance level right over here. Now there is an inverted head and shoulders in here that has broken, that's trying to break out and can't. We'll put it that way. So it might be able to do it this week, and if it does, then the measurement is up here in the 147s, almost 148, above that resistance level right there. If it would take a big stock market break for that to happen. If not, we think that this range right over there is what's going to hold it. So for the moment, we're looking for 125.24 as this upward target right over here, and then rolling over. That's what we think we're going to get during this next week, this pattern that is shaping up right here. More attempted rally and then rolling over. That would be inverse of what we're expecting for the stock market in the coming week. So last week we said that we thought that the stock market would continue to rally into the early part of this week and then would roll over. And the area that we were looking for as the resistance zone, 27.89 to 28.03, it managed to trade up to about 28.02 and then roll over. The fact that it got to the top of the resistance range lowered our, raised the support zone that we were targeting. We were originally targeting 27.12 as the downside, whether it came in this week or in the coming week, and now that downward, that support area has risen slightly. So like I just said in the bond market, I expect it to rally and then roll over. The stock market, we expect it to decline and then bounce. So most of this coming week has downside risk based on what I'm seeing in here. You can see this area right over here is pointing to where those nested bottoms are. Where this shortened cycle pattern is at 14 days right over here. So that is suggestive of the fact that we're looking at a low somewhere March 21st, March 22nd in the for this coming cyclical low period. This support area right over here looks like around, we'll call it 27.22, so about 34 points from where we're trading right now, very near the close. Looks like the downward projection, and then we get a bounce. Now if we're right about this analysis following these rhythms, a decline and then a rally, the nature of this rally is going to be a big tell. If it can't get above that 61.8% or this resistance zone and then rolls over and fails, you are entering that next leg that we talked about when we looked at the junk bond market earlier in the show. That would be a real tell. We're going to learn about that. So for the coming week, we're looking for a decline to 27.22. In the NASDAQ, which we might as well look at because I know that you're all also interested in the NASDAQ, you can see the better pattern in here, and you can see this upward momentum. And the upward momentum has been now here since February 21st, where you had upward momentum in the S&P 500 only be established in the last couple of weeks. So the minor support zone, you can see that there is selling coming in here every day. Note those red bars right there. We think it's going to accelerate down here into this March 22nd date is the date that we're looking for, and March 21st date. That would take you to the basically the end of next week. So either we're going to get this pattern where it declines through the end of the week and then bounces right around Friday, or it bounces like Monday or Tuesday of the following week, depending on how much this extends out. Our downside target in here is 69.14, which is about 107 points from where it's trading now. That's a blink of an eye the way this market is trading right now, so that's pretty easy to get, assuming that this downward momentum carries, this downward trend carries in this declining phase. I don't want to say downward momentum because essentially to see that you'd need to go to a 1-hour chart to see that momentum had turned negative in there. But just for this daily chart, momentum is still positive, and therefore we expect it to hold in that slim ribbon area and in that minor rising support zone. It's probably not really rising anymore because you got away from that high. So we're going to call this a week that fights upward short-term momentum and gives some more ground to the downside, and then either late week or early the following week then turns up for a rally that is going to be a big test for the market situation. So you can see that's our short-term view, looking for lower prices for the stock market for the coming week. It worked really well last week, and the last 2 weeks the short-term patterns have been really strong. That's it for the show today. I hope there was a lot of great information for you. I want to remind you, give us a thumbs up if you like all of this work that we put into this if you're watching us on YouTube, and make sure that you become a YouTube subscriber. Follow me on Twitter at askSlim. We post charts every single day there in the mornings, and there's a lot of great information that we post there. So you usually put up between 1 and 3 charts that illustrates our analysis on stocks that have compelling news or compelling charts on that day. So you want to make sure that you see that. We really need your support. Make sure you sign up for the Cycle Workshop and become an askSlim member. Any one of those levels. You want to get our charts, that's level 4. You want to get our rankings and setups, that's level 3. And they all include all of our videos, which is level 2. Over 250 videos, and if you want to learn about trading, that's the place to do it. 8 different categories of videos. Please do become an askSlim member. Support our business, support our team. There are 6 of us in addition to me that work on managing this site, doing analysis and building products and all that. So support us, become an askSlim member. I'll see you next week. I want you to be really careful because it is so crazy out there, and we're always wishing you great trading.